Welcome back, everyone. This is Miles per Hour, and today I'm going to be going over Coinbase going public, which will be happening in April. So I'm going to be giving my general thoughts on it and some crucial things you should know before deciding to purchase any shares. So listen to this. Coinbase began in 2012 when former Airbnb engineer Brian Armstrong and Goldman Sachs trader Fred Ursam joined forces to establish an exchange that would, according to them, make investing and trading in cryptocurrencies more straightforward and fair. And now, the time has come for this company to go public. Rather than commence a traditional IPO, the company is using a direct listing on the Nasdaq and will trade under the ticker COIN, coin. So initial public offerings and direct listings are two methods for a company to raise capital by listing shares on a public exchange. While many companies choose to do an initial public offering, an IPO, in which new shares are created, underwritten, and sold to the public, some companies choose a direct listing, which is what Coinbase is doing, where no new shares are created and only existing outstanding shares are sold with no underwriters involved. So a reason a company might want to do a direct listing instead of an IPO is maybe the company can't afford underwriting, doesn't want share dilution, or they want to avoid a lockup period. So the main reason for a direct listing, and probably the one that makes the most sense, is that direct listings are just less expensive than IPOs. However, without an intermediary like an IPO, there is no safety net ensuring that the shares sell. Shares are just sold directly to the public, which is the trade-off here. So let's get back to Coinbase. A regulatory filing related to the listing confirms Coinbase is profitable and that 2020 revenue more than doubled from the prior year. In fact, last year the company went from a loss to a profit and came out on the other end with $1.14 billion in revenue. And of course, this is all thanks to the huge interest in crypto that we saw in 2020. And remember, part of Coinbase's business model relies on revenue from transaction fees of users buying crypto on their platform. So as long as the interest in crypto remains strong over the next decade, Coinbase should remain profitable as well. So a little bit more about Coinbase. They integrate 15 blockchain protocols and support over 90 cryptocurrencies on their exchange. And currently, a majority of their net revenue is from transactions in Bitcoin and Ethereum, which are the two largest cryptocurrencies right now. So listen to this. Coinbase is being valued at $77 billion, which is absolutely insane. This is such a high number, and this number is based on the trading of the company's privately held shares on the secondary market. Those shares in the largest crypto exchange in the United States are changing hands on the Nasdaq private market at around $303 a piece, according to two insiders of the auction. This implies that the total company value is about $77 billion, greater than the Intercontinental Exchange Incorporated, the owner of the New York Stock Exchange. So, does this mean Coinbase will hit the market at around $300 a share? My guess is no, but honestly, who knows, to be honest. I think anything around $300 a share is far too high for me. Even though I'm really excited about Coinbase going public, I would definitely wait for the price to drop before I'd even consider picking up shares. I honestly have a feeling that the Coinbase share price is going to be pretty steep regardless, even if it isn't 300. I'll keep you guys updated on Coinbase once I have a better understanding of what price they'll be going public at, and if it's a good buy then. But for now, I'd say hold off on buying any shares at their initial offering. Alright, that's it guys. Thanks for listening, and I'll catch you next time.